What's going on, everybody? Tom here with another video. In today's video, we'll be taking a look at the stock markets for the week ahead. We'll also be talking about why this is the most important chart to be looking at in the markets right now, along with our technical analysis for the Sp500, Nasdaq, dollar index, gold, silver, Tesla, Dogecoin, and more. It's all been about this Saturday Night Live for the Dogecoin and crypto markets. But the question is, with the weak jobs numbers, what's next really for the stock market itself? Stay tuned. Alright guys, well, as we like to do on this channel, let's break down what happened on the Friday trading session. And we can see here it was a sea of green after that weak job number came out. And we'll talk about that a little bit more throughout this video and what it really means and why the market goes up after a bad number like this. We're back in, let's wait for more stimulus, let's never take the stimulus away kind of markets. Let's also talk about the fact that we're still in earnings season. And of course, we have the most anticipated earnings releases here upcoming. If you ever want to get this, Earnings Whispers makes a really great visualized idea of what's going on. This week is a lot of strange companies. Maybe some of them you do have. Of course, a lot of people do have Palantir. That's going to be an interesting one to see whether it can actually hold up. We've got Alibaba Group as well, another very interesting one. Walt Disney and heaps of other basically medium to semi-large companies. Let's now go over to what happened on the Friday session, talk about these indices. So we had the Russell 2000 performing the best. In fact, the Nasdaq was out in the lead very early in the session, dropped off, and then came back strong. And we'll talk about what actually happened because we did a live stream here, and it just shows you how great technical analysis can be used during a live session, during the start of the market to take advantage of. And if you ever go back, watch the Friday live session, go near the close, near the end, and you'll see what we're talking about. Here's the Dow Jones. Here's the Sp500. They were all up very, very strong throughout the session. And we move back over to the actual sectors, and you'll see that energy and real estate and industrials and materials, all some of our favorite sectors at the moment, especially materials and energy, have been doing very, very well. Now, what wasn't doing well? Defensives, XLU, XLP, consumer staples, and utilities. I still don't expect utilities to do very well for the next 6 to 12 months, and then it will have a decent time. So it probably comes as no surprise after seeing the moves in the tech stocks that, of course, Goldman, Prime, hedge funds, etc. were shorting those tech stocks for the past 9 to 10 days. Now, if we think about it, it makes sense. The markets went down pretty heavily, and you can see here the net shorting of the markets and sell-offs of those tech stocks were pretty heavy. We did see this on our analysis. We obviously saw that huge amount of support that was going to get broken through. It quickly shorted through, went down almost perfectly to the channel distance, which we'll show you later, and then came all the way back up. And now I'm wondering whether we get a rotation back in here, and we should be able to tell based on our chart analysis. The other thing that we want to talk about is the jobs number. And as I said, we're back in this kind of economy where we get bad numbers, guys. And guess what? It's all good because the Fed's going to print more money and everyone's going to feel great about it. It's as ridiculous as that. And it's not actually the first time we've seen this in the market. Ever since the global financial crisis in 2008, 2009, we have now seen sometimes bad news become good news because the sugar rush hits the market. And what's it all come down to? This bit here. Treasury yields, US dollar fall as worries ease over early Fed taper or early reduction of all that information. You'll also see this little news article over here that says most popular, Dogecoin nears 75 cents and slips as crypto pioneer Silbert seen betting against parody coin ahead of Elon Musk's Saturday Night Live guest host. Now, I've said this for the last week. I thought that basically Doge would hit the high just before Saturday Night Live or around that. It's that kind of classic buy the rumor, sell the fact. And one of the tellers for us on the channel had really got to do with the fact that we had that very, very strong movement earlier in the week coming into the event. That usually means that the market's going too fast, too ahead of itself. It happens a lot on Apple stock as well. The same kind of things can be applied to markets ahead of earnings or ahead of big news or key events. Now, a lot of you will be really excited in the crypto markets. Before we get stuck into the analysis, I just wanted to mention this. This is a ratio of where Ethereum should be in price of BTC. And it's actually pretty accurate, I think, the way it works it out. So it's saying here $4,748. Now, we've just seen Ethereum go absolutely mental, $3,872. So it's still not at the technical fair price, but boy, oh boy, is it getting close. This is a huge gain here. And a lot of people have been betting on or betting against Ethereum for too long, and now it's suddenly come into the limelight. Earnings results so far in the US still very good, 82% beat rate. That's why the market's at all-time highs, and it's just keeps going up in terms of just generally good beat rates. Let's now get into the technical analysis, and I want to start here with the dollar index. So we saw that jobs number come out, and instantly the dollar index tanked. It tanked straight through this trend line support, and it looks like it's on its way now all the way back down to these zones. So we need to talk about what that means for the markets. Now, let's say the dollar index cannot find any buying pressure through the next couple of weeks. If we break through this level here, this 88.90, or basically somewhere around this 88 kind of zone, what does that have implications for? I think it's got severe implications, because it could mean that the dollar, remember this is a monthly chart, could go all the way down to the next big level of support, and that is 84 cents. That is huge. If we have 84 down here, this is going to be the point where you're talking about not only a market on steroids, because it's going to be loving it, but at the same time, the dollar index is getting very weak. I mean, it hasn't been this weak for quite some time. And considering every other country is also doing a huge amount of stimulus, it just shows you how much the markets are thinking that the Federal Reserve and, of course, just the US government in general is going to devalue the dollar over time. Let's see if that trend continues, and we'll be watching that on the channel. Now, what's this good news for? Of course, gold traders, silver traders, that type of thing. And we saw the instant reaction there. Gold hit our first target. It hit our 1825. The double bottom is complete. Congratulations to traders on this channel that we saw this. We obviously have done a lot of analysis here from gold. We talked about it down here in the 16 kind of 70s, 1680s. We talked about that big rejection. We talked about this bit. We talked about the breakout, talked about this. We did it all. And we watched it live go through here and take out the stop losses. I really encourage people to go back over and watch that Thursday session when gold started moving near the end of the live recording. It was pretty special stuff in terms of just seeing how fast it chunks those zones, and it's a great learning experience for new time traders to see when they take out stop hunts and how they do it, because Wall Street are nasty like that. They do it, guys, and that's the speed at which the algos take everybody out. So we've hit the 1841. What's next for gold? Well, it's pulling back down now, and it's found a little bit. Remember, 1825 was kind of like our support resistance area. It's finding maybe a little bit of buying pressure. What I tend to think after these types of events is that we usually have some moving average that it comes back to, and then it swings off that. This is where you start to get into more swing trading style, and whether that's a 4-hour 20, which it's most likely going to be something like that, or whether it's a different one, we can't necessarily tell just yet. But there is going to be a lot of opportunity in gold if it continues its way up to maybe the 1950 plus. So we'll keep watching it. We'll keep having to see the structure formation, but there should be some swing opportunities in the bull side. So I don't think people have missed out just yet. It just becomes more trading than investing at the lows at this point. Let's have a look at silver. Silver just did an amazing trade. And this is not only that it did the same thing as gold, but think about what it just accomplished. We had rejection wick, rejection wick, rejection wick. This is on the weekly chart. Every single one of these rejection wicks has been taken out with a massive, big, bullish candle. And this is because people have been stacking silver. And on top of that, of course, we've seen a weak dollar. Look at what that means for the price action. This is basically saying that all of the people that were shorting it here have gone away, and the bulls are in full control of this market at this stage. So I would still expect silver to hopefully get to our 28. And of course, if it gets through 28, I'm thinking that there could be a decent move up here to the 30s. So there's still, again, opportunity in these markets. We just need to watch the key zones. And I'll be watching 28 like a hawk this week for silver, and I'm sure many silver bugs out there will be checking it out. Let's now move over to Ethereum, and I'm going to cover Ethereum a little bit more than BTC, because BTC is stuck in the zone. Until it gets past 60, whatever, yeah? Very tough to trade in this current area. It's breaking up, it's breaking down, it's doing everything. So all you need to do is say 60,000, we're looking for a close above that, then we can move to 65, and we can actually have some clear direction in what BTC wants to do. We're clearly in big alt season or Ethereum season at this point, where the ratios are coming up, and this is where the money and the interest is. So great trade here for anyone that got the closure breakout. This is a 1 resistance, 2 resistance, 3 resistance, closure breakout, classic type of pattern in an upward momentum. You can see it's constantly making higher lows And now we've probably close on completed that, or if not overextended on it. So let's say we took this distance here, which would be what I'd be looking for. There it is. So 3955 makes perfect sense for me. Stop just before the 4,000. Amazing. Now we start to coil a little bit, and then hopefully we continue to break out and get towards that eventual fair level for Ethereum. Why does some of this make sense? Because if we go to the Ethereum BTC actual ratios, we go back over things like the 1 month, and you should always be doing these ratios. Why do I think it's kind of stopping? This was always our initial aim, 0.066. We had down here this 0.0539, and then we had this one, which was where it spiked to last time and then sold off from. So I'm very cautious of Ethereum, especially just before 4,000. Even though I think it's still maybe undervalued to BTC, this is a super important zone. And I want to show you this because you can see how quickly the ratio can change in Ethereum. And it's known for this ratio change. This is what happens. Even back in 16, even back before that, Ethereum's known to have great big bull runs followed by huge ratio changes into BTC. So remember, when BTC gets back to 60 and goes past it, that's going to be a catalyst for a lot of people purchasing it. And I think it's really, really cool point to bring up in this video. Now let's move over to the stock market and indices. What are we thinking for the week ahead? Well, we'll start with Tesla. And all I can say is we've got this series of lower highs. We've got this point here, and we have not broken through it. In fact, the market's actually trapped between this. I think it's this and the moving average, the 20, the red one here. There's so much noise in front of it though. You've got the 20 moving average exponential, you've got the 200 simple moving average, and the 50 exponential moving average, all here, which it needs to break through to get back up high. And I feel like for Tesla traders, what you're really doing is you're trying to break down maybe a 15-minute chart here, and you're saying, okay, where are my resistances? Where have I been struggling to actually keep moving up? And I think this is the zone, 682. Why? Who knows? Is it important? I would think for a 15-minute trader it would be, because you have like a trough here, a peak, a higher trough, and then potentially a higher peak. Now you get through here, what's that going to give us? It's going to give us most likely a 700 plus break, maybe like a 710, 708. So there's some definite structural patterns that are forming in the smaller time frames. We don't usually go down here, but I'm stretching here for Tesla because I know you guys want it covered, and there's no great longer time frame, daily 8-hour, 4-hour kind of patterns that we're seeing. So that's what I'm looking at in the 15-minute. And it's again the same kind of structure that we always use on this channel throughout any really of the time frames. Let's now move over to the US 100, my favorite chart of the week. And I think the one that gave us the most opportunity for some great trades. So we had that level that got broken, this 13,700 and kind of like 40-ish zone. And when that got broken, we saw it on the stream, it sold off very heavily all the way down to 13.4. Then it came back up, went back down 13.4 again. Now what this created was a little double bottom, okay? Little double bottom. We also saw a little pullback. And during the pre-market on Friday, we actually saw it go super strong after those jobs numbers were bad. And everyone thought, yeah, this is awesome. And then we had a massive pullback. And I want to just pinpoint this area here. This is the zone that we were talking about on the channel. Resistance becomes support. It's a great day trading, scalping opportunity. It makes a lot of sense. It comes after a jobs number, which is often an initial kind of movement up, with a huge pullback because it traps everybody into that hype and euphoria, and then it moves back in the direction. And that's the one that I want to show you right here on the channel. Then we go over to something like a 2-hour, and you can see, and then go the 4-hour, and a pattern starts to emerge here of rejection candles. So imagine now, if this week we go into the market, the Nasdaq is weak, it breaks back below here, and then kind of starts to signify further selling pressure. We know that Goldman's been pushing out of tech stocks. We also know that it's still a lot of rotation going into the normal Sp500, which we'll be looking at in a few moments. So could this cause further selling down to the 13.4? I definitely think it could. But remember, the best thing about this type of pattern is that if you get a snap of this high, so you get a closure point above this high on a significant time frame like the 4-hour, that's taking out all the stop losses, and it's a very similar scenario to what we saw in gold live last week. We'll then have further pushing up, and we'll actually go back to testing these 14,050 highs, I would think. And there's another great little kind of opportunity. It's very hard in these markets right now to actually be looking at longer term investing, or middle investing is what I would call it, probably that kind of 1 month to 2 months, because we're getting so much strange information from the markets. And I think you can see that most likely in something like the S&P 500. The S&P 500 almost went bearish. This was the zone, and we maintain this zone as where I believe the bears have got control. This 4120 zone, if it's broken and closed below, the bears most likely have regained control of the market, and they're going to push it fairly significantly down. But what happened on the Friday session is we broke out and above, and we've still got our community trend line that treats us well. It treats us really well, people. This is the one, the community trend line. It's still our number one indicator for resistance in the market and where we expect profit to be taken, and therefore some kind of reversal to potentially start coming through. So let's have a look at the 4 hour here. You can see the clean breakout. I believe there will be some people that if the market does fall off a little bit here and come back down, I'm sure there's some buyers here at 42.15 now, and the completion up to here could certainly happen throughout this week. So let's have a look at this trend line. Let's think about what it's asking for. It's actually asking for a break of the trend line. And at this point, do we like this type of trade? Oh, it's really hard, because it's saying like a 42 or 43 kind of level. Yes, we're past the 42, so 43 becomes the next level of resistance, and maybe we get like a spike up there. So that's what the market is telling us. It's saying all green, all good. We believe there's stimulus coming. Everything's all good, people. And let's move on to the next level. I think we need more information before we figure out what this market wants to do, but I do like that Nasdaq a little bit more from the trade perspective over the S&P. S&P just keeps grinding higher, and that's why we always have bullish optimism in the markets. We try not to go bear unless we get key levels, and this is the key level that I believe the bears are sitting at. So for now, it's mostly scalping, day trading on this market. I think you've still got to be cautious, but you've got to be optimistic at what the S&P 500 is doing here in May so far. Good luck, everybody. And just remember, with the Doge, be very careful in this market. It could be a buy the rumor, sell the fact. You can see volumes are very, very high here. You can also see this particular volume candle is huge. However, there's very little trade. There's just a huge amount of buyers and sellers. So this could be an early warning sign that not all is great in the Doge world. Good luck. We'll see you this week. Come join us 1.5 hours before the market opened in the New York session. And remember to smash that subscribe button, hit the like, and we will see you in another video. Bye for now.